Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the euro currency. So the action that we saw on Friday, as you can see, just confirmed our doubts that we have discussed through the week, even before the holiday, I mean the Independence Day, before the Thursday. When the market was standing here, we said that overall reaction looks a bit heavy, and this is not the way how a bullish market should behave in this point. So looks a bit suspicious, and on our update on Thursday, we said that probably we should be ready for a drop. And actually, that has happened. So currently, guys, with this downward action, you can see it's rather strong. So we see here acceleration, and for retracement, this is too fast. And these moments I don't like. And actually, on the intraday charts, market also has broken through all major supports. First, we have the minor support here, it's confidence support. Then we have our major confidence support in agreement. Both of these levels actually have enough power to keep any retracement of the bullish market. And the fact that market has dropped through them really put the shadow on the upside perspective. So in the current moment, the only bullish hope that we have is that some harmonic in the price action, some mirror action. So if you will take a look at the price action from to the left and to the right from this line, you can see that it's really very harmonic. Here the swing up, it repeats this one. Now we have this upward action, it repeats this one, and this retracement now repeats this one. So if you'll take a look at the further action, here is this kind of the continuation up. But in the current circumstances, this is definitely not sufficient context for taking any long position. So we need to get something else. That's the only bullish hope that we have. But the Chudnapoly framework, and in general, I think that context stands bearish because recent non-farm payrolls release that we've got on Friday mostly agrees with our suspicions of the this market a bit undervalued the United States dollar and pricing too dovish Fed policy. So actual report was not bad. And again, if you remember what we talked about previously, again, you can see on the wage inflation. So again, it was 1 decimal point below the expectation in market. Again, it's mass view on the TV that, well, it's again has become worse than expected, and that's negative. But guys, market actually the data shows that 3.1 wage inflation through the whole year. So it can't be called really bad. So anyway, the chances of the really multiple rate cut in this year looks not very probable. Still, till the major events, it's 2 weeks, because next test will be on the July meeting, and gross domestic product report for the second quarter. Both of these events will happen by the end of the month. The market has relatively free time. It's approximately 2 weeks where it could act on some tactical issues. So if we'll take a look at the weekly chart, you will see that here we have big evening star candlestick pattern. And it seems that if it will work, it suggests some kind of the A, B, C, D pattern down on the daily chart. And I think that this is the pattern that we could pay attention to. So currently on the daily chart, market stands at the support. So you can see this is monthly pivot support, one major fib level, and it's very close to the daily result. The start of the week probably could start with some pullback here, with some retracement. On the 4-hour time frame chart, we could keep an eye on two levels. I suppose that could be 1277, 1280 for a conference resistance. It also agrees with the weekly pivot point. Or maybe it will be even deeper, but it's less probable. It's the 1330, it's major 618 resistance, and weekly pivot resistance one. So there's still levels that market could reach with the pullback. This level is more probable, of course. At the same time, retracement could start, maybe not right from this point, but market initially could move slightly lower just to complete this A, B, C, D patience, OP target, and then start retracement. Taking into consideration the setup that we have, we do not have any intention to trade market on the long side. So we do not have intention to buy right at the OP and trying to get some profit on some pullback. This is not forbidden, of course, but this is too small scale for our updates. And that's why we'll mostly keep the daily forward time frame context for trading. From this standpoint, we need just the pullback that we will keep an eye on, and then we consider chance to go short on euro currency. So that's our short-term view on euro. The most interesting things are still ahead. They are Fed meeting and gross domestic product release. Meantime, market could deal with some tactical issues, which is a weekly pattern, and we will try to use it. Still, coming weeks also will not be blank, so we will get Fed minutes on Wednesday of the last meeting. It's also important, and different inflation data. So it will be CPI, PPI indexes. So it's also something to keep an eye on.